I want to share with you my mindset. My mindset's changed, right? I started reading Rich Dad, Poor Dad, right? Buy assets, pay for liabilities, good debt, bad debt, a lot of that stuff, right? Now, I bought my first triplex with my friend, and it was a vacant building in an area that was up and coming, and we had bought it for 150 grand back in 09, and we just sold it last year for 350, spending about $10,000 into it. So it wasn't actually a buy and sell, but a buy and hold strategy. Now, Winnipeg went through a huge market increase, but this whole time, if you have to live somewhere and you can't live at home for free with your dad forever, right? You buy a multi-family property. You're living there, your tenants pay all the bills, right? Now in Manitoba, in my province, when you buy a fourplex and move into it, you're off rent control, right? So that's the most ideal property to buy when you're owner occupying a property. Also, you put less money down. In Canada, you can put down 10% now. It used to be 5 or 0 back in the day. But now it's say 10% for a fourplex. Whereas if an investor was to buy that same fourplex, they would have to put down 20% and they could not, and then they're still in rent control. So an investor would have to buy a triplex. But in Manitoba, there's that secret kind of, if you do an owner-occupied fourplex, you're now off rent control. So that's a place in the market you can take advantage of. And in your marketplace, you need to learn, to deal with, I don't mind dealing with the tenants. I live there. It was, maybe don't tell them you're the only owner. I did that and it worked out okay, but it might be better to say, yeah, I'm the caretaker, I'm the manager, though you're the owner. So that's something that, it's easy. It's very simple. It's limited risk, right? It's calculated.
It's easy. You live there.
You live there, and how it works is you live in a fourplex, you live there for free, and you make money, positive cash flow. A triplex, you're more living for free. But you can move out, in a month, or not a month, in 6 months to a year or a year or two, you move into the next one, right? So when my son's 18, he'll be the pawn, I'll move him around.
By triplex, do you mean a 3-bedroom and a fourplex a 4-bedroom?
No, suites. Like my triplex is a 2-bedroom on the main floor, a 3-bedroom on the second floor, and a 1-bedroom on the third floor. When I bought it, it was rented for $500. Canadian dollars would be similar to the US, okay? So 500, 500, and 300. And now I'm renting $980. I lived the main floor for 2 years, but now I'm renting for $980, $1096, and $750. And they pay all their own heat and hydro, right? It's a furnace main floor, baseboard heat. So I like to find properties that have separate utilities if possible. My first property wasn't, but we just had added more rent and covered the bills. But if you can separate a few utilities, that way the tenant takes ownership on their consumption.
That's pretty interesting that you rent it out, but then you're talking about flipping houses.
Well, one's a buy and hold, one's a wealth strategy, one's a cash strategy. Right now, mind you, I didn't tell you about my second mind shift. Have you ever heard of David Ramsey?
I haven't heard of David Ramsey. No.
Look into him, research his baby steps. And not saying, I don't follow Ramsey's stuff to a T, but it's good to know the other side of it. Right? When he was 26 years old, and the American lending is a lot different than Canadian, but he lost his shirt. He had millions of dollars of real estate, and then they just started saying, hey, no, this guy's got too much debt. We want to start calling his mortgages. Another company bought his bank, right? They started calling his mortgages, couldn't do it, foreclosed. So he's anti-debt. Now what that's done for me is realized, okay, start calculating things. Like he talks about getting out of debt other than real estate, but look at his principles, and just so you know, he's my gauge of sanity or not. He's got sound advice for everybody. Now sometimes
are you
myself.
About leveraging your current properties?
Yeah. Like right now, I could probably get another $500,000 to $1 million of property.
Easy, yeah.
Right, but at the same time, it's instead of having a bunch of debt, you want to buy a lot of good properties. And also with our market, I think we're on that higher part of the curve. And listen to Hugh Hilton here. He talked about how you can analyze that with cap rates and net operating income. So those are two things I do with my clients: is go over cash on cash return and cap rate. Cap rate you need to learn because it's a worldwide strategy. Right, when I talk to guys in Houston, I ask cap rate, they know what that is. I can talk to someone in Korea, they'll know what cap rate is. So you need to learn cap rate, right? Net operating income, you know what that cap rate is?
No.
Okay, well, you learn about cap rate, net operating income divided by a sold price would give you a percentage, right? So talk to an appraiser. If you know an appraiser, you'll learn some stuff like that. And cash on cash, the other one I like to do is how much money into the deal, how much positive cash flow out of the deal.
All right.
That's another return you can do. But starting out, I like buying multifamilies because it's simple, right?
Sorry, John. What's a multifamily?
Multifamily is more suites, more different units. So
is that like flats for us?
you guys have flats, yes, like a 4-flat property or a 3-flat property.
I mean, arguably, not leveraging your properties comes from quite a solid investment background, right? Because the more you leverage, the more risk you have.
Absolutely. So,
But what you're trading off is growth.
Yes.
Or speed of growth, right?
Yep. But again, that's why I want you to kind of have the other concept is there's also, like with Ramsey, talks about, getting out of debt but your house, then start investing for retirement. And if you look up Google, write this down, Google Ramsey investment calculator, right? And you crunch numbers. If someone puts away $300 a month, until you're 65, it's gonna add up to millions.